Bitcoin just hit a death cross on the weekly time frame, and if history repeats, we're looking at another 20% drop to around the 68K. I've been tracking this closely, and right now, the 21-day and 50-day moving averages are doing exactly what they did before the last major crash. In this live stream clip, I'm walking through the charts in real time, showing you the exact proof behind this prediction, and I'll show you the one thing that could change everything. Let's dive in. All right, guys, we got a 50-day moving average, a 21-day moving average just right here. This cross, not good, just so you know. Now, we can look at every time it's happened in the past. I've already showed you the super guppy. I've showed you the Gaussian channel. I've showed you the golden death cross indicators. This is the 21-day and the 50-day moving average. Very similar. I mean, they seem to cross when all those other things happen, but this is just one other indicator that when the green line crosses the red line to the downside, look at where we are. I mean, look how similar it is just to the last bull market, where we hit a double top. We probably hit a double top, where we start to come down and we bounce and we bounce. This right here was a big drop. That was a 55% drop before we bounced up to 68K. And then this drop here from the top to this bounce area was about 46%. And then it bounced and it did get up to the red line and the green line. It literally bounced right up to where it was crossing. And this is why I've been saying that we could get that bounce back up to the 100 to 105 range, because that would bring us very, very similarly to the left side over here, somewhere up in this range. And that could happen rather quickly. We got Trump talking. We got all kinds of things happening in the world that could cause this to happen, where we have a huge surge. Everybody gets bullish again. Everybody freaks out. Oh my God, this is it. We're going to the moon. And it just is and I'm not saying this is going to happen. I'm just saying this is historically what has happened when these indicators are flashing this. Now, before I show you this next indicator, quick thing. If you're sitting here thinking, okay, so what do I actually do with this information? I'm running a free training course where I teach you how to set up trades for moves like this. You don't need to be a chart expert. I'll show you the system step by step. Click the first link below to grab your spot. It's in the bio. It's right below this video. That's free, by the way. All right, now let's check out the rest of the video. This is a serious indication right here on the weekly time frame that it crossed. It didn't just hit it and bounce. It's crossing. And we did have a wick up to it right before the cross, which is typical. Let's go back to the last time it crossed. Right when it's about to cross, boom, we have a big wick up to it. As soon as it crosses, it didn't hold above it. And that was it, the beginning of the drop. The last time before that, green line come down, it crossed, and we had a big pump up. We literally went above the green line here and tested that red line before dropping into a bear market. The one before that, green line crossed. We dropped way down here, and then we did wick up to the green line, but that was it. And that was still beginning of the bear market. So when the green line crosses the red line, that's the death cross. When the green line crosses back over the red line, that's the golden cross. And that's an indication that we're pumping back up. Right here, before the cross, now that's an indicator in and of itself, turning gray. Every time it does turn gray, it usually is the beginning of the end. When the 21-day moving average crossed right here, that was weeks after it turned gray, and that was after this big pump up. Now, it hasn't turned purple or red yet. Oh, wait, oh, shit. What do I see? Is that purple coming in? Not good. You see, when the purple starts coming in, guys, we could have a huge fall off. But here's one of the major indicators down here. We got the RSI. We are still below the floor. We did come above it right here, and we got above the moving average. As you can see right there, we got above it, and we got above the floor on that big pump up to 98, right where the cross happened. But then we came back below, not only the floor, but below the moving average. Now, it looks like we're coming back. We're trying to get back above it, the moving average now, and it certainly is possible. We have a green candle here. We did bounce on this line so far. This upward trend could just be moved. It might not be in the right spot, but we could still be in this little bit of upward trending wedge here. If the price gets up to 100 or 125 and the RSI is only here, probably not going to go up any higher. The RSI has to break out and literally invalidate the bearish divergence. What we have here is bearish divergence going all the way back to March of 2024, when we broke previous all-time high and we got to 73.8 right here. That was when the Bitcoin ETFs all got approved, and 280 days of just consolidation and a giant bull flag before breaking out to new all-time highs. And that was the highest that we got on the RSI. Ever since then, we've made higher highs, higher highs, higher highs, higher highs, higher highs, lower highs, lower highs, lower highs, lower highs, lower highs. So far, all of these higher highs in the price made lower highs in the RSI. I guess what I'm trying to tell you is that this has to break the bearish divergence in order for the price to get higher and hold. So right now it's below the floor, still. Gaussian channel on the 5-day. Not only did we get below it, okay, so when we're in a bear market, it turns red. Here's the last bull market here. We come to the center line, we break below and touch the bottom line. We retest the center line, can't get back above it. It turns red. That's the beginning of a bear market. We're in a bull market top here back in 2017. We wick down to the Gaussian channel, we bounce. We come to the center line, we bounce. We can't get out of it. We hit the top, we come down to the bottom of it, we bounce and hit the center line again, turns red, beginning of a bear market. This time we came down to the center line, fell through to the bottom line, went below the bottom line and retested underneath. We didn't even wick up to the center line. I'm still expecting us to wick up to the center line and then it turned red. Not good. Usually when it turns red. And by the way, that's on the 5-day. Now there is one indicator that has been accurate all of the time as well, which is the pi cycle indicator. And the pi cycle is nowhere near crossing. And normally it signals a top in the market. And the last time it crossed was at 65K in the last bull market. So right now it's not even close to crossing. So that's an anomaly. That's something that has never happened. Now, if the pi cycle was showing a top right here and we had that cross and all of these other things were in play, I'd be short with a lot of money for the rest of the year, probably. But the pi cycle cross, which is always accurate, I mean, has been so far, we're not even close to crossing, which could indicate that the top is not in, which is possible, of course, but it doesn't necessarily mean that the top has to be in before a bottom is in. So what do I mean by that? I mean, we could go lower before we go higher. So when the pi cycle crosses, that's usually an indication of the top. The top is in, but this time in this bull market, it's not even close to crossing. Here's the green line and the red line is this one right here, still coming up. It's this red line right here. Let me just change the color of it. And they're not even close to crossing, guys. Not even close, which usually indicates that the top is not in. And that could very well be. And that's why I'm saying the bull and bear market cycles might be changing, but that doesn't mean that we're not going down. I would say that we could be looking at another 20% at least to the downside. Right here is 20%, and that's about 68K, which is the previous all-time high. And if you add that to the already 30% drop that happened, that's only a 46% drop. And that would be half of what the average bear market drop is. That would still only be half. So I'm being conservative to say that the bottom would be 70K if it were to fall through all that. So, I mean, we certainly could pump up to 130, 140, 150, 160, but is it going to do it soon? Is it going to do it in the next couple of weeks? Or is it going to, be in August after we come down to 70 and bounce? I don't know. Those are the crystal ball questions. I mean, there's a lot of very smart people out there, and I only follow a few of them that think that another 20% to the downside might be all there is, and that would be it. This would be a much shorter bear market. The bottom could be in. We could be very close to it. This might have been it, 80, but to say that we won't double bottom there or even come down a little lower to the 70, and then you got the president. This is why this time could be different. You got something that's happening that has never happened before. You got governments around the world. I know I say this a lot, but you got governments around the world. You got individual states going on a Bitcoin reserve. We got a president of the United States promising to buy 1 million Bitcoins over the next 5 years. We got Bitcoin reserves. We got the president and his whole family into crypto, making billions of dollars a year. His 2 sons have one of the largest mining facilities that controls 2% of the entire Bitcoin production. Trump's 2 eldest sons, their mining facility mines 2% of the entire Bitcoin market. That's huge. And then you got XRP, Ripple. You got all the contracts with all the banks. You got all these digital currency exchanges that are all going to switch over. Possibly the entire economic infrastructure is going to be switching over to blockchain technology and crypto settlements on the back end. And that is the main thing that could make this time different. I mean, this time could certainly be different. But what I would still say is that in order for us to see that big move to the upside, this needs to get above the floor. I mean, we're still down here below the floor on the RSI, on the weekly. But as of right now, all I have to go by is the charts, technical analysis. And right now, all of the major indicators that the pros use, and I'm talking about hedge funds and traders that make millions of dollars, are all just flashing this bearish signal. And it's a little concerning, but at the same time, there is one major one that's still not even close to flashing, and that is the pi cycle indicators. You can see the last time we had a cross was here. That wasn't even the highest price that the market went. It was at 64.8. We dropped all the way down to 30, came all the way back up to 68. And so that's how I trade anyway. I look at all the indicators and try to make an educated decision. But the problem is that we got so many of them flashing bearish and one that's been accurate every single time, showing a pi cycle top at the top, not even close. These 2 lines, not even close to crossing. So here's the bottom line, guys. Based on what I'm seeing, I think we're headed down to 68K, maybe 70. That's another 20% from here. But the pi cycle is telling me the bull run isn't over. So this could just be a shakeout before the real move to the upside. Now, all these indicators are bearish right now, but the pi cycle cycle is saying the top's not in. So will we hit bottom before we hit the top? That's possible. But if you want to learn how to position yourself for both scenarios, how to trade the drop, catch the pump after that, I'm doing a free live training where I'll break it down for you, the whole system. No fluff, just the strategy. Click the link below the description to register. And if you found this helpful, check out my next videos where I go deeper into this indicator. Also, please like and subscribe for more videos like this.